Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around about 10:30, there's been a little bit of choppy trade, at least in the first hour and a half of the market opening. Before I go any further, let me give you certain levels on Sensex, Nifty, Bank Nifty, Rupee Dollar and crude oil. Sensex is down 10 odd points, 79,220 is the level on Sensex. Nifty is down about 20 odd points, 23,985 is the level on spot Nifty. Bank Nifty down about 335 odd points and the level is 50,655. On the rupee dollar equation, weakness of 4 paise on rupee against the dollar and the level is 85.82. Remember friends, over the last couple of weeks, rupee has been depreciating against the dollar and has hit the historical lows. And this is not only on the INR front, but also on other major emerging market currencies and developed currencies as the dollar is gaining strength across all relative currencies. On the crude oil front, though there is a little bit of downtick this morning, but last week elevated. Brent is trading at $76.32 to a barrel and NYMEX is trading at about $73.79 to a barrel. News flows on the geopolitical situation and of course the demand supply side is going to drive the crude oil prices, but we expect a little bit of cool off this week on crude oil prices given the elevated lows that we've seen last week. On the INR and dollar, there have been times when the dollar supply was witnessed in the markets, currency market last week and the week before. It did stall the dollar appreciating against the INR, but it did not work out well. Remains to be seen what happens this week, whether there is going to be more dollar supply to give a little bit of stability as far as the Indian rupee INR is concerned. On the market front, we had a positive start for the year 2025. Then we had a little bit of profit booking. Friday was a meltdown. And today, as I speak to you, absolutely flat trade, direction wise, stock specific moves, but pressure remains on the frontline indices as well as broader markets. Triggers are positive, and to sum up some triggers on the positive side. First of all, the business update given by certain companies in sectors have been very, very positive and the outlook looks quite strong. Advanced tax numbers reported indicates that Q3 earnings should have a little bit of more positivity compared to what we've seen in Q2 and the GST collection number. So if you have to put all this triggers in the backdrop and the anticipation that we are going to approach the curtain raiser for the Q3 earnings by next week, expect their momentum to come through. On the earnings front, our expectation is that there could be a better color and shade for the third quarter. But one needs to be extremely sector and within that sector stock specific. Financials, autos, given the fact that month on month sales number for some of the auto related companies have been positive, barring of course Hero MotoCorp, which was a little bit of disappointment. Flipping on the earnings side, expect this, of course, but we need to see the discounts also that were given out to clear off inventories as far as the auto numbers are concerned. So we will watch out for that sector earnings as we go forward from here on. US presidential swearing in ceremony of Mr. Trump and of course the policies that he's going to lay out. Remember what he has spoken about in terms of tax cuts in America and tariff hikes across various countries. Remains to be seen what are the policies over there and how will that impact in terms of the global economy. Broadly speaking, on the market front, to give you a range, high and low range, Nifty spot, 23,800 on the lower side and 24,500 on the higher side. And this is a broad range given the kind of triggers that are lined up. Of course, we will be approaching the budget also very soon on 1st of Feb. There are expectations that are built up. Government will do a lot in terms of budgetary allocation towards defense, infrastructure, job creation, certain sectors like electronic manufacturing sector. power related sector there are expectation, and to give a push to consumption. There is expectation that is built up, and I think as we go closer to the budget date, we'll have more and more such expectations coming out. But the most important thing is to listen to the Honorable Finance Minister on 1st of Feb, which is a Saturday, and what she has to say in some of the balance sheet, government balance sheet, and of course, fiscal prudence is something that we expect to continue in terms of the discipline. So we will see budget related triggers also, sector specific, stock specific, given the kind of large expectation that has been lined up. 23,800 remains to be a strong floor, because that used to be a very strong resistance some time back, some months back, and 24,500 remains to be a overhead supply zone wherein you might see short-term profit booking coming through. But our sense is that as we have more clarity on the policy front, and as we have more clarity in terms of what Mr. President-elect Donald Trump, as he assumes the office and the policies that are laid out, flows will also give you a little bit of direction in terms of which way the flows are going to go. Don't expect any miracle meltdown or a run up on the markets side. We expect 23,800 to hold out strongly, and a range bound trade between the levels that we mentioned can be anticipated. As far as the index is concerned, stock specific news flows will definitely have its impact on the stock prices, and that's where the momentum is going to continue. So we always maintain that you need to build a portfolio. On the fundamental side, try to look out for sectors and stocks which look very promising in terms of growth and policies. We do share two investment ideas on the fundamental side from a long-term point of view. Not only based on budget, but looking at the business opportunities as we go into the future, we have identified two such investment ideas. First one is from the housing finance sector. Canfin Homes is the stock that we have highlighted. And remember, friends, there has been a lot of talk about when will the rate cut start in India. I think prudently we have to leave it to the wisdom of the Monetary Policy Committee and the governor, given the levels of inflation and the recent data points that we've seen on CPI, GDP and inflation front. Rushing into a rate cut is not going to be prudent, as in when the most important factor which is on the minds of the Monetary Policy Committee and the Honorable Governor is the inflation. So when you see a stable inflation on the lower side, sustainably on the lower side, I think that's when you would see the rate cuts coming through, which will have its impact on the sensitive sectors. So housing finance sector is one that we are a little bit more positive on, not only on the rate cut front, but also the way the real estate sector is performing and the affordable housing theme in terms of the budget, which is likely to unfold. Low housing projects, affordable housing projects, etc., etc. And the policy changes in some crucial states like Maharashtra, Mumbai, and relatively across India. If there's going to be more positivity, then if real estate sector does well, then housing finance will also do well along with real estate sector. The second one is from the auto original equipment manufacturing companies, auto ancillary Exide Industries. This is also related to the policy announcement as far as the EVs, automobile EVs is concerned in the budget. Now, there is expectation that there should be a little bit of adjustment in terms of the pricing of EVs. And if that so happens, then definitely we'll have more positivity on the EV manufacturing companies as well as for battery manufacturing companies. Case in point, Exide Industries or likewise Amara Raja Mobility, etc. So given the price correction and the fact is that you don't require you require battery in all categories of vehicle, whether it is driven by petrol, diesel, CNG, or even if it's an EV. Replacement demand is also quite high and new order market is equally strong. So two investment ideas from a long-term point of view, Canfin Homes and Exide Industries. Mind you friends, these are long-term investment ideas. Our humble request is to start accumulating at current levels on a small portion, and then as and when you get dips in the market or in these two stock prices, you can add on to the stock slowly, steadily, gradually from a long-term point of view. These are not BTST, STBT, 2 months, 3 months kind of investment ideas. These are long-term, and by long-term definition is 12 months, 16 months, 18 months plus. Thank you very much for your patience hearing. I'll see you again next week. Please do take care of your health. Bye-bye.